Saudi Arabia oil giant Saudi Aramco plans to sharply increase investments in energy production after it reported a doubling of profits in 2021. The firm aims to boost output significantly over the next 5 years. Saudi Aramco said it plans to increase its capital expenditure to $45 to $50 billion this year, with further increases until the middle of the decade. Last year's capital expenditure was $31.9 billion. More details coming up in the international business news.
Markets have been volatile during the pandemic, as sudden changes in economic activities have influenced both supply and demand. Energy prices have soared in recent months, as demands have outstripped supplies of oil and gas. The conflict in Ukraine has added to the pressure to find additional sources of energy. Saudi Aramco's move is likely to be welcomed by political leaders worried about the impact of high energy prices, although the boost to investment is aimed at increasing output over the course of the next 5 to 8 years. Saudi Aramco said it planned to increase its capital expenditure to $45 billion to $50 billion this year, with further increases until the middle of the decade. Last year's capital expenditure was $31.9 billion. It would raise its crude oil maximum sustainable capacity to 13 million barrels a day by 2027, the company said. It also aims to increase gas production by more than 50% by 2030. Saudi Arabia produced just over 10 million barrels of oil per day in February. The oil company more than doubled its net profit to $110 billion in 2021, up from $49 billion in 2020. The price of a barrel of Brent crude oil increased by around 50% in 2021, and, with energy prices remaining high, analysts expect profits to increase further in 2022. Elsewhere, food and energy prices have risen in Singapore since the conflict in Ukraine broke out, and the government has taken measures to stabilize the market. It is a Southeast Asian country that is almost entirely dependent upon imports for its food and energy. Utility bills went up 3.2% in the fourth quarter of last year and another 5.6% in the first quarter of this year. To cope with possible risks, the government has introduced policies to ban the export of electricity and targeted assistance to low-income households and small and middle-sized enterprises. Finally, China kept its benchmark interest rate for corporate and household lending unchanged from the previous month as the market expected. The one-year loan prime rate, a market-based benchmark lending rate, was held at 3.7%, while the over 5-year LPR, on which many lenders base their mortgage rates, remained at 4.6%. Over half of the traders and analysts surveyed in a poll by Reuters last week expected China to keep both rates unchanged. Markets now widely expect policymakers to resume monetary easing soon to revive the global economy.